Hello and welcome to Inderes TV. Nordea released its Q3 report last week, and now I'm in the studio with analyst Kasper Mellas to discuss the company. Hi Kasper.
Hi.
So let's start with the highlights of Q3.
Well, first of all, I wouldn't usually use the term highlights when talking about the bank's quarterly performance, but this time definitely one of the highlights was the sales in asset management, which was at a very strong level, taking into account that usually Q3 is seasonally the lowest because of the vacation period. That was definitely a very strong and solid performance from Nordea. Otherwise, overall, the result was very solid as expected, slightly better than the consensus estimates, of course, but overall, not major surprises there. So net interest income coming slowly downwards, but that's something everybody already knows.
Right, yeah, so no big surprises.
No big surprises, yes.
So among its operating countries, Nordea's business development has been weakest in Finland, at least now recently. What do you contribute this development to?
Well, I think there are two major differences between Finland and other countries. First of all, most of loans, household loans and corporate loans in Finland are variable rates.
Right.
So when the rates go up, that of course is away from the money that people can spend on other things, and of course that, as we've seen, has led to very low transaction volumes in the housing market, for example, and overall spending on other things. So that's one thing that has led to very high unemployment rates in Finland compared to other Nordic countries, for example. And then of course very quite high portion of Finnish economy comes from the construction sector.
Right. Yeah.
And that of course has been one of the sectors that suffered from the high interest rate regime the most.
Of course, yeah. They also announced a 250 million euro share buyback program, which I guess was kind of expected. It's been in their strategy for a long time to do buybacks. But can you explain what this means for the company and how it would impact an investor?
Share buybacks are just a part of companies' ways of distributing excess capital to its shareholders. So that choice is actually between traditional dividends and buybacks.
Right.
And this is just Nordea's policy to distribute circa 60 to 70% of their net income through dividends and the rest of the excess capital through share buybacks. So that's just a way of giving the owners the excess money the company has in their balance sheet.
Yeah, so nothing special about it, really.
No, this is just something that the companies can select on how to do this, and there are some variations usually depending on the ownership structure. So as Nordea have said, they're constantly trying to listen to their shareholders on how much they want this, the capital to be distributed to dividends and how much through share buybacks, and this is their current policy.
Okay, yeah. So what are your expectations for the upcoming CMD in November?
I think one of the key topics is related to cost growth in the future, or cost development, because that's one thing that's very hard to analyze outside the company, and this is also something that the management has that they can. There's some areas where they can actually choose how much to invest, how much to increase costs, how much they require new personnel, for example. So that's very interesting to hear what the company has to say about their cost development in the future. And I would expect that they're gonna reassure the markets that there should be nothing to worry about, and most of the large investments are already behind, related to, for example, IT systems and digital services. So I'd expect a very modest growth estimate from the management. Yeah. What's related to the operating expenses. Then I expect the management to revise the current profitability target, which is return on equity above 15%. And then relate to that, I'd expect them to lower their target for cost income ratio as well.
Okay.
So I think so overall I'd say that even though the performance has been really good, I think they're gonna even lift the bar a notch again.
A little more, yeah.
Yes.
But we'll hear more in November then after the CMD. So it seems that Nordea is able to perform quite stably. What do you see as the reason behind this performance, that they can do this?
Well, one of the key reasons is related to the banking business overall, which is very stable. The loans produce income frequently or continuously, and the same thing happens with assets under management. So those major income streams are quite stable. And then of course, when we compare Nordea to other banks, one thing that is certain is their cost effectiveness is very good, and they have been very good at managing the cost development even in the past years. So these are one of the key aspects, and of course their loan losses have been almost non-existent.
Right.
Yeah, especially when we take into account the current economic development, which has been nothing to celebrate about really. So yeah, those are the key things.
Yeah, so those are the strengths there. Like you mentioned, Nordea distributes 65 to 70% of its profits as dividends and through share buybacks, and also aims for a steadily increasing dividend. Do you consider this a sensible strategy, or would you want to see them spending the money somewhere else?
I think it makes sense, because usually, and also in the case of Nordea, there aren't really that much organic investments to actually be made. They have invested in IT services, and either IT infrastructure, digitalization, that kind of things. But I think the company is being quite clear that the major investments are now behind, and this should be going forward. The level should be somewhat stable.
Right.
Of course, one thing that the bank could use their excess capital is acquisitions, and Nordea has said that they might do some smaller acquisitions. For example, in Denmark. But I don't think that changes the overall picture that the bank creates constantly excess capital that they really don't have use for.
Right.
So it makes sense that the share of dividends is quite high, and there are also buybacks to complement this distribution.
Yeah, and I guess the banking sector, at least in the Nordics, is already quite consolidated, so there's not that many targets.
Yes, and if you think about potential bigger M&A activity, there are of course some antitrust laws that might come into play, so that kind of makes it certain that we don't see any very large transactions. So maybe some smaller ones, as they have done. For example, they bought Danske Bank's Norway private operations.
Yeah, and then the other part, going to other countries, it's always a challenge. And then I guess banking, even if to us it might seem banking is similar to a layman, that it's similar in every country, but I guess there's quite different approaches in different countries to banking as such, so that maybe start opening up a new country would be quite challenging as well.
Yeah, exactly. So I don't think that they're gonna go for that. So smaller acquisitions in the Nordics might be on their playbook, but nothing major.
Yeah. So it makes sense to pay dividends and do share buybacks.
Definitely.
And then finally, let's talk about the valuation and recommendation. Where do we stand?
We're still on the positive side. Even though the share has appreciated a lot from the beginning of this year, I think there is a case to be made that Nordea's expected return is quite good. This comes from a stable dividend yield, for example 7 to 8%, and slowly the business momentum and the profit should start to rise again. So it's a combination of still high dividend yield and an improving result, which gives a expected return above 10%. Of course, this means that no more the case doesn't rely on, it's not, it cannot be justified just from the dividend yield, but now we have to, going forward, we have to see some profit growth as well.
Right. Yeah.
So the bar is definitely higher than before, but taking into account the overall development or better outlook in the economy is the loan demand is picking up, and I assume that the management is gonna continue managing costs effectively. So I think they're in a very good position to keep or turn the profit to rise again, and that gives confidence that the expected returns is sufficient for a positive recommendation. Yes.
Yeah. So we are waiting for some more positive signs going forward then.
Yes.
Thank you, Kasper.
Thanks.
So a cumulative recommendation and waiting for profit to start growing again. You can read more at inderes.se.